Good afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Markets Now trading events. Hope you're all doing well out there. Had a good bank holiday weekend. I do have to apologise in advance, team. I've got an AC, a busted AC in the corner, which is spinning, which is quite loud. I'm not sure if you guys will be able to hear that on the mic. And I also have another fan on the right-hand side of me blasting warm air straight in my face. It is necessary, though. It's teetering on the edge of 36 degrees in my home trading office, so it's not a very enjoyable experience in here at the moment. It's actually insane. So gonna get some decent opportunities out to you guys. Gonna get us ready for this afternoon's US markets, and then I am going to take my tablet and go and sit under the gazebo in the garden and enjoy some fresh air with the tablet. And I'm actually going to do something very naughty this afternoon. I'm going to trade from the remote setup, which is a relative, I suppose, for all intents and purposes, a mobile device, which, by the way, please don't make a habit of. But for me, it's just necessary. I need to get some trades on, and it's too damn hot to be in here. So let's get cracking on then. Good to see you guys. Hello there, Agency. Hey, Matthew. So let's start from the top then. Quick review of this morning. This morning's European session was abysmal. For me personally, I don't know if you guys had a good time with it, but for me it was abysmal. The markets didn't really move. We didn't have any sort of real nice sort of volume breakouts or anything going on. We ranged for the majority of the session right up until 11 o'clock. We just kind of moved sideways after this little intermittent downward stroke here. It was abysmal. Yeah, that's right, Jack. And good afternoon to you, Jack. Good to see you, mate. It was abysmal. It was abysmal. We had a little bit of a downward turn here in the DAX. It was short-lived, led to a range, led to more range. It was just very, very slow. So yeah, not great. Yeah, I did. Yeah, I took a loss on the DAX. Short, and I was about to take a loss on the EU50, but I actually didn't take this trade because of the risk reward. When I was trying to get a fill just after the 8 a.m. open, the spreads, for whatever reason, I don't suffer with spread variation too much at all on my broker, usually. But the spread variation this morning was terrible, and even though I was trying to find a fill at around 611, 113, my fill was coming in at around 611.2, 611.1, which means my risk reward ratio then was on the side of a 1-to-1, maybe a 1-to-1.5. So I wasn't actually able to take the EU50 within my trading parameters this morning. So I had to bottle it really. I had to back out. But it would have been a loss anyway. And the DAX trade I got in for the entry on this downward candle here. We were trading to the upside, and I was watching this in real time, as I do, and I sent the market order in because the market went quickly down, and I think, right, great, here we go. So I jumped in at around 25, 20-ish, a little bit above where that trade panel is, and yeah, subsequently got taken out of that one after spending the best part of a half an hour ranging and moving sideways. So yeah, it was a really unexhilarating morning for the European Open, but I'm hoping that the US session, beg your pardon, is going to be better this afternoon. I think we may be in for, hopefully, a few decent opportunities this afternoon in our US markets. Now, thinking about the trading parameters today, the US 30 Dow Jones high of what we're really targeting is a little bit skewed here, isn't it? Because we've got major points of inflection coming through the top there, which is about maybe 50.95. But then we're subsequently hit by the next point up, which is 50.98. So what we would do in this instance is... Oh, whoops, I'm selecting my zones. So what we would do in this instance is look to place a zone in at around here, I suppose. Somewhere around there. Just so, as long as we get this. That's the low that I want. Because we had such a V reversal there. There's definitely money in the market. Look at the size of the knee-jerk reaction we had coming away from there. Which means commercial money likes that level. As we go along here at the moment, we can see that the price action, for the most part, has been sticking to it. We've had a couple of outliers, but for the most part, price has been sticking to this area. We eventually do get the breakdown and the continuation this morning. Remember, guys, as well, by the way, this is the Asia session. So it's kind of irrelevant to what we're really looking for here. Now, this leads us to where we're trading at the moment. So the margins today for the short, target profit would be down at the lows there, which is the base. And then we do actually have the opportunity for the long after we get a rejection from the short. That's the only way we're going to really get a long unless we go for the breakout, taking the market back up to around 50.98, which I'll come on to in a moment. So the US 30 Dow Jones is trading slap bang in the middle of these two available margins. The breaker structure for the long is down at around this area in here. So then what we would be waiting for is the price reversal from this area to then come back up. Or alternatively, if the price rallies first, we wait for the breaker structure back down again and then we take the short. So it would be one or the other of those two trades. The long between there and there, I'm not too sold on that. And I think it would be wise, prudent even, to consider the rest of them first. So, for example, this NAS 100, already just looking at this chart, it just looks a lot better than where the Dow Jones is at the moment in terms of its state structure. So we've got the previous high, big liquidity point. We can see lots of commercial activity taking place here between the hours of 4:45 yesterday and 11:30. So that's good. Recent history as well, which means it's still intact. It's not out of date yet. It doesn't need to be recycled. We've got a rejection taking place at the moment of that 29.85 high. And we've got a big point of inflection, I would say, about there as well, which leaves us with a really, really healthy trading margin. Now, don't forget, we've got big liquidity down at the lows there, but I'm not entirely sure how confident I am on a Monday to be taking the market all the way from A to B. It doesn't seem quite right. Or A to C, let's say. It doesn't seem quite right without, sort of passing or targeting B first. So for the day's opportunity in the US Tech Index, I would probably be looking at a breaker structure just below where the price line is at the moment. Maybe about there for the short. And my target profit for this one would be down below at point B out of the A, B, and C steps. Stop loss for this one, probably above the recent high. That's going to yield you around a 1 to 2.63. You could go as low as a 1 to 2.35. I just think it's unnecessary if the market breaks structure at the time the market opens. So I'd be going for around a 1 to 2.8, something like that for the short. If we break long, you are absolutely right. There is long availability today in the NAS 100. We would be looking for around here. Now, see where I've got my zone placement? I'm not putting my zone on the top and just resting it right on the top of these areas. I'm looking for the most amount of hits as possible. It's one of those quantity over quality, actually, for a change here. So we're really looking to just to try and maximize how many times the market has hit this level. This is the most realistic outcome for the market at 29.92. And so therefore the long today is going to be between this area here and this area here. Now, warning, there is a question incoming, so get ready for it. Why, in this instance, would I not be looking for a break, close, and a retest above that point of liquidity? It is a liquidity point, a point of inflection with commercial knee-jerk reactions. So why wouldn't I be interested in waiting for the full BCR setup above that zone before taking the trade? If you're at work or whatever and you can't answer, that's absolutely fine. I do appreciate so that's the case for some of you, so no worries. But for those of you who can, please do try and answer. Excuse me. Ryan, you say because it's on the 1 minute time frame. Okay, let's go up to the 15-minute time frame. Try and make things a little bit more simpler then, eh? Same thing. On the 15, I can look at a 15-minute chart on a 1 minute time frame. I do that quite often. It's a force of habit just because I've been doing this for so damn long. But the 15-minute time frame, rest assured, is the same. Right, Coratim says second attempt. No, not second attempt. Jack Buckles is saying it's already taken place. The BCR. So Jack, you're coming close. You're coming close. Matthew, you're on kind of the right line as well. But everyone's missing the big elephant in the room. Look at the price. Zoom out with your eyes for a moment. Look at the whole picture. What are we always talking about? Where has the market been? And where is the market heading to? Liquidity. Liquidity. Yes. Yes. Thank you, Jack. Because the market has come from this area in here, hasn't it? Right? The market's come all the way down into this area and it's had a big reaction. It's spent a little bit of time down here building the orders, gathering those commercial moves, and boom, we get the big move to the upside. So where we've come from is big money. That's big liquidity. That's commercial cash down at the lows there, 29.70. It didn't just touch the surface. Where did it actually get to within that zone? It got to around the 50% area, didn't it? Where all of the orders are. So now the market's gathered all of that money and it is ready to get going. I mean, look, the damn thing looks like it's going to get there before we're going to even get a chance to get in ourselves at this rate. But that's why we won't be bothering to wait for a BCR in the middle there. Because the market has come from one stage of big liquidity and its natural course, its natural progression is to get to the other side. And then in the middle, we're going to have a series of BCRs and whatever and so on and so forth. But the fact still remains that the market is going to be heading there. So that's why we don't give much of a what's the term I'm looking for? Much importance. It's not going. We don't give it too much importance because we're weighing up the value of this area in here versus this area in here. Okay, does that make sense, everybody? This trade's getting going before we even get into it. If we reach the liquidity, will it be good for a short opportunity to fill the orders? I would definitely be up for shorting it, but I would not be up for taking the entirety of the margin. The chances are that we will not probably come back down here, and the reason I say that is because if we go to the daily time frame, what has happened on the daily? Right, and Jack, to be fair, you've already said this. Exactly. There has already been the BCR. The BCR is already in effect. So because of that, we probably won't end up coming back down because at the end of the day, the market's already carried out that process. So now it's about taking the market long back up to the previous highs, awaiting the criteria for a short, so a break of structure potentially at around 29.91, 92-ish, and then we take the short back down to around 29.86, and we essentially just flip this trade on its head. That's literally what we do. We just flip that trade on its head. Right, download. I actually can't remember if I downloaded the Dow Jones either, so we will download that one. Right, US 500. Again, not bad, to be honest. Not too bad. Pretty decent margins today on these guys. So we've got the highs up there at the moment. Liquidity across the top. We've got a semi-significant and definitely tradable break of structure area, which is... What the hell? What's going on there? Yeah, which is about there, which is not too bad as well. And then we're looking to trade the margins between the two. I'm just trying to think, actually, if that would be a bit better there. I think that would make me feel a little bit more confident. So we'll go for that. So then we look at the break of structure there from around 75.46. And we want to take the move back up to the previous highs at 75.56. And the stop loss will be nicely tucked in behind for a 1 to 2.75. Beautiful risk-reward ratio, very balanced, high success rate as well. It's very, very important. The short for the S&P isn't too bad, but we do have to wait for the rejection above. So that would be the break of structure. The no man's land for this market is between this area here and this area in here. So we would wait for the market to rally, come up, break structure, and then ultimately head back down to the target profit, which in this case would be about there. Okay, so then your short trading opportunity today will lie between A and B down at the lows. And that's going to yield you guys around a 1 to 2.86. Another good, well-rounded trade idea. Download. Righty on. So that's going to be the US Open. The energy markets. I did give you guys this one this morning. Not entirely sure if you did it or if you didn't do it. I haven't done it myself yet, but the breaker structure for this one is there, essentially. Even though it looks like it would have tagged the entry anyway. I need to set this up myself regardless. But that is the trade idea. Okay, because we've had this high, all I would do in this instance is just move that zone ever so slightly up. So for those of you who are fresh to the charts, you haven't yet put your orders in for the week, natural gas 1 to 2.5, breaker structure entry 1 to 2.963, and we're looking for the continuation away from big liquidity. So we can download that one again. I will send that out, the revised version, if you guys haven't taken it, which I suppose most of you haven't at this stage. We've got UK Brent US crude. Again, I did touch on these this morning. There's nothing that we want to be doing about these ones at this time. I would say that Brent's probably looking a little bit better, as it, I suppose, generally does than crude. But the gap fill is only to 102.95. It's a very small gap. So I think it will be a bit difficult to. Navigate that. What we really want to see is the continuation back up to the previous high. But as you guys can see, if we zoom out here, get a little bit more perspective, what we have seen is a break, close, and retest of an inflection point, which would then lead us to the bias that the market is probably going to continue trading lower. And we could look at maybe lows of like 88 and 90, for example. If we check out the daily time frame here for a moment, we've still got a hell of a long way that we could fall from this area. And if things ease off, remember this is very, very geopolitically driven at the moment. It only takes one word and this thing will spike back to 110, 112 in no time at all. So we do have to navigate this one with caution. But I think, like I said, at this moment in time, we want to see perhaps an intraday breaker structure below 97.25, and then we could take the market all the way down to 93.21, which, and I didn't mean for this to happen, but it is just that wonderful sort of almost magical symmetry of the financial markets, because that exact level that I'm looking for would then lead the market to a completed gap fill on the gap that opened up on the the weekend in April. And that gap never got filled, which is very unusual, which is very, very unusual. So that would be the completion of that gap fill there. And we would look at an entry below 97.26, 97.30. That's a really, really nice trade idea and very realistic for this week ahead as well. So we'll stay tuned on that one. I won't send that out as a trading opportunity yet, though. Metal markets are in complete disarray at the moment. Gold trading down 1.14%. Platinum's getting hammered at the moment, minus 2.63. Sorry, that's silver. Sorry. God. Yeah, minus 2.63 day for silver, but doesn't really account to much. Platinum's down minus 1.13. But yeah, they're just in a state of disarray at the moment. It's way too much chop in there for my liking, so I'll stay clear of that one. And then we've got the FX space, which the AC actually seems to be presenting with a little bit of potential in here. I quite like that area there, although we did get an initial breakout of it at 245 on the Friday. We've got the high up there. That's a really, really nice trading margin. I mean, if you consider this high and run that along as the breaker structure, it perfectly correlates with the mid of the M reversal and the rejection point there. So it's absolutely perfectly correlated. So if I did want to take a long in the AC, then I would be waiting for the break of structure between there to come up to here with a stop loss about there for a 1 to 2.34. Again, really nice, well-rounded, balanced trade idea. And I will send that one out. That'll be that one FX trade that we do from the market report. Okay. So I suppose at this stage, to recap, and this is a good time for you guys to think about any questions that you might have or things that you'd like me to look at. We have opportunities on both sides of the market for the Dow Jones. We've got opportunities on both sides of the market today for the NAS 100. And we've even got both opportunities either side of the market on the S&P 500, which is 6 in itself, which is quite a good place to be in, I suppose, so long as the parts of the process fall into place that we need to. We also, on top of that, have the potential for natural gas. We have up-and-coming pipeline orders in UK Brent. And we also have the opportunity now available in the Aussie CAD. So not too bad for a Tuesday afternoon. Let's see what we can get on the board, team. So are there any questions? Anything at all that I can do for you before we call it? Before I pass out from heat exhaustion? All good, Ryan. All good, Matthew. Good. Yep. Good job, guys. Well, I suppose I'll call it a wrap there then. If you do have any questions or if there's anything that I can help you out with after the fact, please feel free to send me a message. And yeah, we can get to work on that together. And yeah, apart from that, team, good luck. Let's see what we can do. Been a pleasure as always, guys. Thanks for catching up with me today. Take care, good luck, trade safe, and I will see you then. Bye-bye.